Everybody needs a hobby.
Thank you, Mr. Toastmaster. Fellow members, and most welcome guests. Few months ago, I met a client. A client came to me, "Hey, Aries, I have a finance mortgage business. Can you help me to make me visible in the internet and social media?" And I said, "I haven't done it before, but I can try. I never give up." That's my motto. So what I did, I tried to understand. I did some research of his business and everything around it. His business is a mortgage, a simple mortgage. And then when I did research, I start from something basic, the information that they need to know, regular people, regular Joe can find it, until experienced people. So tonight, I'm going to take a challenge. Rather than talking about IT, I talk about finance. At the end of this meeting, this speech, what I want you to get is the benefit of being a smart in personal banking.
Get closer to you.
Thank you. So I'm going to talk about 3 topics area. I'm going to introduce you with the basic knowledge of banking, and then understand how the credit record works and how the credit score works. And at the end, you want to be a smart banking user. This is the 3 types basic of personal banking. When I came here, the first thing that they want me to do is get my check, my bank draft to the bank and get a checking account. And I asked them why. Why is a checking account? Because a checking account is a basic account where you do a lot of transactions. And that was one of my article talk about. And the second one is saving. Saving is if you want to put money and you don't want to touch it so often, because if you touch it more, like twice, for example, in a month, you're going to get charged for it. And the third one, the third common one, is getting a loan, line of credit, HELOC, home equity line of credit. Now let's talk about credit record and credit history. There are 2 major, I would say there's more company who keep in track of your credit history, but there are 2 major of them in Canada. One of them Equifax, and the other one is TransUnion. The Equifax is one of the biggest company that a lot of big banks use it. TransUnion sometimes. What they do is they monitor your credit history. And I lost my wallet before. And if you want to protect yourself, call them first just to let them know that, hey, I lost my wallet. Because all your identity and your credit card information are all there. So what they will do is they will give a flag that if somebody use your credit card or trying to apply a credit, they will get warned. And it will protect yourself too. And it stick for the rest of my life, actually. I don't know, maybe 7 years. Even when I found my wallet, they still put it there just to make sure that, this is somebody didn't see your information. But every time I go to the bank, they ask me, hey, there's a flag here. What's going on? And I have to explain to them a little bit of what happened. The next one, I want to talk about the credit score, how they calculate it. When you have your first credit, I think they're gonna go with the fair. They're gonna go with the good credit right now, 670. Oh, sorry, 585 to 669. That's when you started. And you, as time goes by, you apply more credit, you pay it, then you're gonna build up every month to become a top excellent credit. And if you are below 584, you're poor in terms of credit score. And what that means to you, if you apply for, let's say, a credit card or loan, you're gonna get, could be the maximum of the interest they will give it to you. They're gonna treat you as a second class of citizen in the finance world. But if you are the excellent 730, they're gonna keep calling you, hey, by the way, we have a new product, you wanna try it? We give you $20,000. Just like that. That's what they do. Because they trust you, you're gonna use the money, and they will take the interest, and you will pay on time. Now, what affects your credit? The first thing is your history, your payment. When I got my first credit card, they keep telling me that if you pay the minimum amount, your credit score is good. That's a myth. That's not true. Let's say you owe $1,000 and your minimum payment is at $10. You think that by paying $10, you're gonna get a good credit score and it will boost up your, no, it's not. What you wanna do is pay the full amount. Because if you pay full amount and you have a good credit track record, every month you're gonna increase by 5-10 points. That's one of the major calculations that they have. The second one is how much money you owe. For example, you take a loan for $10,000. If you only use $5,000, is it going to be the same impact as if you borrow $9,000? What do you think, Roger?
Probably not.
Why not?
It's just the contorted way that bankers think.
Okay. Darren?
Total amount of your debt, right? Which increases your debt, which increases your liability.
That's a good point. It increased your ratio. So if you have 10,000, let's say you have two loans,
Right.
and you want to borrow $10,000. Each, it's $10,000. You have $20,000. Take $5,000 from one and $5,000 from the other one. Because the ratio that you have, it's lower. Comparing you borrow $9,000 in one account and borrow $1,000 in another account, this ratio is close to the limit. Every month, they're going to reduce your point. And that's what happened with my line of credit until I found out about it. Funny thing is, when I went to my banker, I said, hey, why I cannot get credit pretty quick this day? And guess what, Aries, your credit score is went down. What? I always pay my bill on time. It doesn't make sense. And then I sign up for, they have a product, both Equifax and TransUnion, they have a product called Monitoring Your Credit. And that's when I found out that my limit, it's affecting my credit history. So you want to make sure the ratio is pretty slim. And the rest is if you apply for new credit, they will ding you 10 points, just like that. So make sure you know when the right time to get the credit. And if you inquire so many times, you're going to lower your credit history. Now, this is the important part. This is what you have to pay really close. There's 3 types of situations that you can maximize by personal banking. If you always have a lot of money in your bank, what you do, get an account that has a minimum balance and give you benefits. Like $5,000 minimum balance, it gives you a benefit. And they waive every other charges. And if you have unstable income, sometimes you have it, sometimes you don't, get a credit union. Usually they give you a lot of free stuff. Or online banking, for example. And the last one, if you don't have money at all, when you have money, get a line of credit. So during the rainy days, you have a backup plan. And this one, they will not count how many transactions you do. As long as you pay it on time, that's all what that matters. So like for saving account, you have a maximum twice transaction a month. But line of credit, there's no maximum. Fellow members and most welcome guests, I want you to visit this article. Go to this website and then select the financial section, and hopefully you will learn more about financial. Mr. Toastmaster.